Okay, let me also welcome in Mr. Krishna Kumar from Sundaram Mutual. Mr. Krishna Kumar, good morning. Thanks for joining us. Let's get your perspective in as well. Things are looking pretty strong right now, and we're just a couple of points away from that record high. It's inevitable. I think the bigger question is where to from here. How are you viewing the kind of momentum we're seeing currently? What's the outlook going forward?
Yeah, I think there's a lot of positive, factors which is creating a lot of positives for emerging markets in general, and particularly also having a rub-off on India. I think the resolution of the US-China trade wars and also softness across global growth is making all the central banks a lot more dovish than earlier. Softer rates, liquidity remaining more or less where it is, I think is quite positive. Inflation globally is contained and creates space for rate cuts within emerging markets, given that the developed countries are on a hold. So we do see a lot of stimulus for the equity markets in the emerging economies, and we do expect some more stimulus from the Chinese government, which will also push up growth in this region. So all said and done, I think the EMs look more attractive at this point in time, and with the dollar being more or less flattish, and so that's the view that we have. And I think within emerging markets, I think given the valuation comfort that was there in the broader markets, not just talking about Nifty, but it's more across the broader segments of the market and the lower market caps. Clearly, the money has started to chase risk, basically. Clearly, also the pre-election trade seems to be playing on, given that there has been a swing back towards the ruling establishment in the last couple of months. So I think, while it's very difficult to comment on electoral outcomes, I think, in the past, we've always seen that uncertainties kind of ebb away, and into the next 6 months of trade post-elections, we have a very strong continuation of the trend that was there earlier, and the trend is in terms of improving earnings at this point in time. So we think, Indian equities are poised at a broader level to move, reflecting the strength in earnings.
Krishna, I guess, added to that fact would also be the missed out feeling, because the March rally, it's the FIIs which have had the better of it, at least if you were to go by the flows data. So I guess, with that missed out feeling, a lot of people would be jumping in at these junctures, and purely because of that, maybe we will stay afloat and be on the course for some more time to come, election or earnings recovery or what have you.
Yeah, I think point to be noted also is over the last 12 months, the domestic investors have been continuing to keep their faith in the markets, though the mutual fund net cash slowed down from 20,000 crores a month to 5,000 crores onto the equities, but you definitely have seen a fair amount of 2 lakh crores kind of coming into the market from domestic investors. So I think they have been prudent and having faith and continuing with their systematic investment plans during a decline. And I think they'll benefit from the uptick that is coming through. At the same time, I think there will be uncertainties, pockets of correction along the way in the next 3 months. So investors will find opportunities to come back in more stronger if they have a missed out feeling. So I think all is not lost for the domestic investors. There is a lot of rally still left in the market over the next couple of years. So people can definitely aim to have good targeted returns from equities also.
But from a shorter term time frame, would you suggest that the best is now behind us? Would you say once the election uncertainty is over and once there is some sign of an earnings revival coming in, there's more push that we're likely to see in the market? Or would you say that, be a little circumspect, it is scenario number 1 which is going to play out, and maybe it's now time to partially profit take?
I would think that a longer-term investor needs to continue to be in the markets and keep regularly putting money into the markets. The year definitely, is a year where the growth numbers, etc., from a macro could weaken, as you are seeing already. But the earnings momentum across indices is going to be quite buoyant. So in the previous years, we had probably upward trending economic growth and macros, and we had earnings which was a little flattish from 14 to 18. But right now, I think into the next 2 years, we would see that the earnings are going to compound at a much healthier clip, driven by the bigger sector in the economy, the banking and financials, and some of the value cyclical sectors. So I don't think we need to be worried about short-term corrections and volatility. There would be opportunities to buy more rather than to book profit and sit out.
How lucky have you been for us? We were practically almost there, but just while chatting with you, we've managed a fresh all-time high on the Nifty. So we've scaled and surpassed the previous record, which we hit on August 28th. And that's last year, by the way. So there we are. The record rally couldn't have been better than this. It's clearly D Street on fire, the D Street Dhamaka as we're calling it. Today, though, you are seeing a big push come in from India Bulls Housing. That's your biggest winner on the Nifty. It's almost a 3% bump up that you're seeing. Bharti Airtel, I must say, that for the last 2 consecutive sessions, this one has been holding out. And today as well, it's no different. Metals have really come back with a vengeance. So you've got a Tata Steel, which is looking good. You've got a JSW Steel, which is holding out. Titan has also made it to that 1 lakh crore rupee market cap club. That's made its push. ICICI Bank sitting pretty at that 400 level. HDFC Bank, SBI, Bajaj Finance, Reliance. Touch wood to the screen, Aman.
Oh, yes, indeed. We can pop the bubbly now officially as we have hit that record high level. And as you said, Aisha, we were sniffing distance as well away from that. In fact, let's connect with A. Balasubramanian, CEO at Aditya Birla Sun Life. And great to have you on board. There's definitely celebrations with that record rally playing out, Bala. Question is, what do you think we do from here on, and what would be your approach to the market? Does it mean that it's time to partially profit book or continue to hold strong?
Yeah, I think definitely it's good news that one market is touching a new high, and it's nothing but reflection of the optimism that is getting built. Toward emerging markets, and within emerging market in particular to India, that reflects on the kind of flow that's been coming from overseas investors who do not want to actually take a chance of any outcome on the poll results, which can actually take the market to a completely new level if there is a stability of government comes back. So these are the reasons why there has been a flow that's coming in, and definitely if you look at the macros, clearly we are showing an improvement on currency, we are showing an improvement on inflation, and there is also a path that's being drawn down for interest rates to be brought down further, and then finally the balance of payment also now is getting better. See, I think if you look at an overall combination, the macros are getting better, except the micro numbers are not coming up to the market this point of time. Definitely the good news was the GST number collection for the month of March is touching an all-time high. I think on an overall basis, I would assume the financial year 2019-20 could turn out to be a good year from the broader market point of view.
Right. Krishna, just wanted to get your perspective in on it as well on this, because a month from now and we would be in the thick of earnings, or rather thick of elections, I beg your pardon. Do you think a lot would depend with what the election verdict is, or do you think this market is going on its own momentum, going on flows, hoping for an earnings revival, and election would be at best a 1 or 2 day event?
I think while the earnings season would start off in the next week and would play a significant role in terms of shorter-term movements in terms of the sectors and stocks, but overall, from an India story perspective, closer to elections, you will kind of see some volatility. But however, volatility is always a friend of a long-term investor. So as we just discussed, we need to go over this period with a view on a next 1 year basis. as we also spoke about, if you see the last 3-4 elections, election days have been quite volatile, and the month around that, and post that we have seen the markets become more reactive to the fundamental growth story, valuations and sectors which are looking good, and the so narrative changes beyond May is what I would think so.
Take a look at some of the names that have contributed from a UPL from the last high to this high. You know, we've been talking about some of these names: Titan, ICICI Bank, Wipro, Access, Bharti Infratel. You know, Bala, the question is more about, you know, who's going to be contributing here on. Are we going to see broader participation as well when it comes to the move? And, you know, how much scope really is left on the upside? While everything may remain positive, is this the beginning of a rally, or is this perhaps going to be a more sustained uptrend from here?
Yeah, I think the way we see is the whole of last year, the markets are driven by 5-6 companies. And as we came towards the end of Jan, February, March last quarter, we saw some bit of broad basing of momentum. We were witnessing it. I think the way market could behave as we move forward, the significant underperformance we have seen, especially the next Nifty companies and the smaller mid-cap companies, which is quite unique in the year 2018, probably that could reverse, and we will probably see the broader market participating. I think all about it would be in the function of one, how the earnings will turn out to be, and secondly, all the steps that has been taken by both in the budget as well as the interest rate cut would largely benefit the small and medium term enterprises, and therefore we would probably expect these kind of benefits accruing to mid-sized companies. Therefore, we will see more and more bigger, larger movements coming from other than Sensex and Nifty companies. And that, I think, will also be a true reflection of how the sentiment improves largely towards investing in equity.
Isn't it, Krishna, that, you know, up until now, the rally has been very restrictive. It's been with the benchmarks and it's been with the large caps. Although in pockets you are seeing strength built into the broader markets as well. How long before you think this rally can be more broad-based and broader markets will also try and catch up with the large caps?
I think the mid and small caps have already started kind of catching up. If you look at the last couple of months, I think the post Kashmiri attacks, Park attacks that we had, I think there's been a sharp pullback in the small cap and the mid cap indices per se. You know, probably 15%, 20% kind of pullbacks across many of the stocks there. So this is basically a reflection of risk returning to the space. However, given the kind of valuations that they are in and the comfort that we see related to where they were in 2017, I think there is still a long way to go in terms of the broader 90% of the market catching up with where the Nifty is today. So over the next 3 to 6 months, we see a lot of positivity and flows coming into this part of the market. The FIIs have broadly been more restricted to buying India at this point in time through passive ETFs, ETF money, and have been not as active on stock selection and alpha generation. So that's what we think will start to play out in the next 1 year, where the foreign capital and also the domestic capital, which was finding its way more to large companies, will now start to decisively move towards mid and small caps and good strong growth stories there, which are undervalued. And so there is a huge opportunity for a massive catch-up trade in the broader markets over the next 12 months.
All right, let's also bring on board Sunil Singhania, who joins in. And Sunil, clearly it's a day of celebrations. We've been talking about how this has been fairly anticipated, as the election as a big event was leading up to the big election event. We have seen quite a bit of fervor in the equity markets. Do you believe that at this juncture, one should, for those who have missed the rally, is it too late now to participate? And what's the sense that you're getting? 11,756, 39,000 on the Nifty. Where to from here, Sunil?
Hi, good morning, and congratulations to you and all your viewers for a new high for the market. I think very clearly, the last couple of months in particular have been pretty good. But I think what we have to also sort of keep in mind is that this rally has been also fueled by general, I would say, optimism in the global markets. And I think to that extent, we cannot say that it is only because of elections. So I think there is a clear move, specifically in the U.S., towards moving assets into the emerging markets, and flows into the emerging markets have been pretty strong. And India has also been a beneficiary of that, specifically towards the second half of February and the month of March. So yes, it's a good feeling that we are in a new high. However, the broad markets are still significantly lower than where they were. I would say that going forward, there is a case for remaining optimistic about the Indian economy and the markets.
You know, Bala, even within the large caps, one has seen that the rally has just about begun to broaden out, and you're just about seeing that sectoral churn. What looked very restrictive to banks, and that too only the ICICI Bank, Axis, as well as HDFC banks of the world, is now spreading across to some of the PSU banking names as well. You are seeing, after the IL&FS crisis, money move outside of Bajaj Finance and trickle into some of the other names too. Of late, you are seeing metals as well catch up. Where is it that you find opportunities outside of banking, Bala?
I think if we look at clearly, I think the whole thing of banking rally began one on the back of improvement in the bank balance sheet is coming, and second is corporate lending started picking up, and therefore some of the banks which are largely focusing on corporate lending as well, wholesale book lending, also began to move up. And as you rightly mentioned, the sectors, apart from this being the large weight, clearly the OMCs led by the oil price movement, that again provides a great opportunity. And second is the entire consumer durable space. While one can argue that valuations of these companies are high, but having seen sustainable earnings coming from these companies, that remains one of the potential investment opportunities. And third, of course, is the if one looks at pharmaceutical space, the last years has taken the major hit, and what all the negatives are coming in the pricing, and therefore some of these companies in this sector also could potentially be the beneficiary purely on base of the balance sheet strength and the business outlook that is emerging. I think it's all getting gradually moving on the segment, and the last, of course, is the even within the telecom sector, having now seen consolidation, maybe the time will come where the inflection point will reach very soon, would also bring in some kind of traction towards this sector as well. So I think it's moving from one sector to other sectors. Obviously, the banking and financial service sectors will remain the driver of the index, given the fact that 36% of the weightage is coming from only from banks and NBFCs and HFCs alone in the overall index. Therefore, that's where I think the index is being driven.
So much for joining us this morning, and on a significant day, that too. Sunil, let me come to you on that in terms of contributors. And, everyone's really wondering whether we are in a domestic cyclical upturn, whether we're going to start to see other pockets of the market catch up, whether it's on earnings or price movement as well on the exchange, so that it's a little bit more comprehensive, the move that we see from here. What do you think?
No, I think you're right. Obviously, the rally to some extent has been very concentrated, with top 10 stocks predominantly contributing for the whole rally. However, having said that, the quarterly numbers for September quarter as well as for December quarter started to show some green shoots in the economy sectors also. So if you look at the EPC guys, they have been reporting quite good numbers with good ROEs and record order books. Same can also be shared about some of the engineering companies. They have been not doing as well for the last few years, but September and December quarters have seen even large engineering companies report quite a good growth in top line as well as the bottom line. We are already looking at monthly numbers, and specifically for sectors like steel and cement. I think the numbers specifically for January and February have been pretty decent. So it is fair to presume that once this election hangover is behind us, because obviously for the next 2 months, because of the code of conduct, not too much will happen specifically on the government spending space. But post that, it is fair to presume that these kind of economy sectors will also start to, hopefully report good growth.
Sunil, thanks much for joining in. Just stay on with us. In fact, Krishna, wanted to just get in your views as to where exactly right now you're finding flavor within the broader end of the market. If you could just take us through the sectors that investors can look to bet on.
I think clearly we are moving a lot of money into the industrials, light engineering, capital goods, and also into the metals and cement space. So these are typical cyclical sectors of the economy and are experiencing, improved demand outlook. Valuations in the spaces are also reasonable and reflect, the kind of pain that the sectors went through in the last couple of years. So these have good potential to deliver strong earnings momentum over the next 2 years and are available at a reasonable valuation. So I think these are areas that we are quite comfortable to increase exposure to. Consumer discretionary is another area which has been under stress in the last 6 to 12 months, and we are seeing value coming back into segments like durables, and if you look at also the automobile space, there is all over there is bad news there, and that's the ideal time where you will find valuations are much more attractive and will play out, the story of growth will play out the next 2 years. So I think we would like to be a little bit ahead and be positioning ourselves into these sectors rather than be exiting them at this point in time. So these are some of the sectors where we think we could make money over the next 12 to 18 months from here.
All right, so that's interesting. In fact, a lot of specific allocations coming in that we can talk to Krishna Kumar about. They're looking at aviation, auto, a lot of cement in some of their portfolios. So it'll be interesting to get a take on some of these pockets as well. But we've got a lot of views and interesting commentary lined up for you. We've also got Ramdev Agarwal on the show for you today, and on a perfect day at that, talking about value investing and the way ahead from here. Always incredibly positive on market trajectory. So we're going to bring you more of that very soon, but we do need to take a quick break.